From our world headquarters in New York, Bloomberg Surveillance, Ken Pruitt and Tom Keene. Let's get right to it. We welcome Jim O'Neill of Goldman Sachs. He survived Ashes cricket. Jim, good morning.
Hey, Tom. How are you? Nice to speak to you.
Good to speak to you again. Let's go right to it. Fiona Lake out with a note off your desk this morning. The RBA confounded expectations of a shift into hawkish territory. This is the Royal Bank of Australia. Is this a picture of things to come where all central banks will be, to be polite, reticent to raise rates?
Well, I think there is a genuine commonality to not go too early and to not upset the growing evidence of an economic expansion in the second half of the year. This is something obviously policymakers have been working like crazy for the past 12 months, or should I say 9 months, to try and engineer. So the last thing they want to do is to take it away too soon. So they're going to be watching financial conditions, watching sentiment, and trying to be balanced about warning about doing it down the road, but not moving too early. So not an easy challenge, but I think that's the message we got from the Australians this morning.
Well, speaking of change, Jim O'Neill, I'm looking here, folks. For those on radio, I'm looking at the Shanghai Stock Index going back to the beginning of the year, and it's a straight line up. And then let's call it early August, Jim, to be polite, there's a shift. Is the Shanghai Equity Index the litmus paper for global mood right now?
You know, I tend to think it's more important than probably many do. If you go back over the past complex year since the whole Lehman mess, Shanghai was the first major market to turn up. Now, I remember the day well because I was in Asia, November the 10th last year. And at one stage, I think we were 91% up from that. Actually, sorry, we were over 100% up from that day. And you could argue that Shanghai rise lay the foundations for many other markets, particularly in the emerging world. And so if what's happened there in August were to be persistent, I think that would be bad news for the rest of us. I'm assuming it's just a big correction. And I was looking for one to the 2,800 area, which we're now towards the bottom end of that range. And I'm hoping it holds that area, because if it breaks below that, then I think it would carry more importance for the rest of the world.
Jim, don't spin in your chair. You're making me dizzy. It's way too early in the morning. Here in America, you're just making me dizzy over there, Ken.
I'm just trying to get you guys nice and awake so you don't need your coffee.
We do need our coffee.
You and Tom were talking about the Australian Central Bank deciding to keep rates on hold. I mean, we assume that central bankers communicate with one another. Are they currently saying things to each other like, well, I don't want to go, you go first, in terms of tightening credit?
Well, of course, we've got a G20 finance ministers meeting coming up in London, actually, at the weekend. And it'll be very interesting to see the specifics and the exact wording of the statement they talk about issues related to this. I'm assuming, though, there will be some kind of comment suggesting that it's too early for policymakers to be implementing exit strategies. And by that means really, of course, the big countries. But I think it will allow individual countries, perhaps such as Australia, to move when they see fit. But as I was saying to somebody else this morning, I think the truth of the matter is, which makes it tricky, whilst to coordinate in general is, of course, very admirable, to coordinate when things are tough because of the mutual interest is actually a lot easier than to coordinate when things are better.
Well, how soon might somebody move?
Well, in that regard, it's a tiny place, but of course, the past month, Israel has actually raised rates, and given Stan Fisher, the central bank governor, is such a highly respected international figurehead, you know, that's got a few eyes and minds thinking about, you know, whether Stan's just ahead of the game and others might move sooner than we all think. But, you know, again, I think we'll see some kind of sign of how the G20 leaders are thinking when we see the statement they make after the weekend. But I'm assuming, given the loss of output in the States and Europe, that it's going to be some time. But you know, we have to stay close and watch the messages.
If you're just joining us, so it's Jim O'Neill of Goldman Sachs with us for this half hour. Jim, when I look at the FT this morning, you got to help us here with the London. I'm confused. You have the Prime Minister being interviewed by Lionel Barber and the team over at the FT, and he's sort of dashing around Lord Turner's ability to ruin your life, to bring in financial markets markets in that. And, Prime Minister Brown's doing the ballet and all that. And the story directly next to it is Nomura got like the next 45 years rent-free in the city to redevelop down by your great river there. It seems like there's like two things going on in London. Does London want to be a financial center or does it not? I mean, those are terrific lease terms for Nomura, and yet the Prime Minister is talking about limiting compensation.
I think you've picked up on a good issue. There's a lot of emotion still going on amongst UK political figures and those close to them, and there are constant contradictions left, right and centre that have actually typified much of their general stance throughout the crisis, especially the past year. You have the Bank of England clearly making comments the past fortnight where they're still worried about whether banks are lending enough and have enough capital. And then you have these kind of comments and tough things coming out of the FSA all the time about how banks have got to be more careful. And some days you kind of think, well, banks can't do anything without upsetting some part of UK policymaking, and they need to get their acts more consistent and clearer. And most importantly, as you imply with your question, given how important finance is for the UK economy, and by that I mean in the broadest sense of the contribution to taxes and the balance of payments contribution, they need to be a lot more careful about this emotive stuff, because it is important that the financial industry stays generally important for the British economy, and they want to be careful what they're planning to do.
Careful words from Jim O'Neill. He is head of global economic research at Goldman Sachs. He will join us here in a bit. Folks, we continue with Jim O'Neill from our news bureau in London. Jim, your colleague in crime, Jan Hatzius, was with us here a week or so ago, and he talked about the call in the United States of a, to be polite, tepid series of quarters after a strong second half 2009. Do you share the same dynamic for Europe? You've written here about a little bit of enthusiasm in Europe, but are they the same way? Good back half of 2009 and then caution next year?
That's what many people are forecasting. We're a little bit more optimistic than the consensus. But what I would say, and in many ways this is the story, together with the Chinese market's weakness, the story of August. It's quite pleasant for the first time in a while, but it's nice to say that Europe seems to be positively surprising, particularly Germany. And I find myself asking questions that I didn't think I would be. In addition to global trade turning helping Europe because they're big exporters, is it possible that the monetary and fiscal stimulus on top of low inflation could be actually stimulating Europe's biggest economy? And you've seen the German employment numbers today. You've seen the PMI survey. Germany looks to be coming out of things much stronger than I would have thought this quickly, and seems to be reasonably well placed for perhaps more balanced and stronger growth than I would have thought a month ago. But I'm very reluctant to kind of get carried away by that, given Germany and Europe's ability to disappoint, Tom. But I think in some ways this is the global story of August.
And well, Ken, 8.3% on Germany unemployment today.
Yeah, and some of the numbers have turned up for France as well. I mean, does this mean that Europe is going to lead the way out, that they're ahead of us?
We're all so reluctant to say things like that, given Europe's seemingly endless ability to shoot itself in the foot the past 20 years or so. But when you really think about it, Europe doesn't have the underlying savings imbalance that the US has had, but it's had a lot of stimulus because of the shock to world trade. And it just might well be that real income growth is giving Europeans more confidence, and if policy stays friendly, I think we're starting to see the basis for perhaps a positive surprise here. So, what 1 month doesn't make a summer, so to speak. I'd like to see another month's worth of data, but this has been a pleasant surprise here in Europe.
Jim, 1 minute left here. Let's get in the obligatory brick question with Jim O'Neill. Is Russia still part of the BRICS? I mean, is it coalescing into some kind of economic recovery?
I think China's had a great crisis, Russia's had a terrible crisis, but interestingly, you look at this morning's data from Russia, and they've had their own PMI survey out. They're close to being back at 50 as well, so it looks to me like Russia's emerging from this mess, and yeah, of course, Russia's still justified being a brick.
Well, Jim O'Neill, thanks so much. From Goldman Sachs.